Happy New Year to both of you. Thank you for joining us. Anisha has also prompted me a question that please ask Milind that why the headcount was negative. Is this an indication of what we should read into it? Because see, this is the guidance number which we get from TCS. And this is the only quantitative number which we get from TCS, which is used by everybody as a forward benchmark.
Okay. So, first of all, if you look at year-on-year growth from last quarter to Q3 of FY22 to Q3 of FY23, it is 57,000 people addition. That is point number one. Point number two is, that we have added a huge number last year, and also this quarter, this last 2 quarters also 42,000 people. So basically getting them, hiring them and getting them to basically become productive takes time, and that investment is now paying off. That is point number two. And point number three is obviously, like I said last quarter, we are going to drive efficiencies now going forward, even more so. And so all these three things together is what is causing the headcount down, and it has got nothing to do with demand. Let me just assure you one more time.
Now that you are driving efficiency higher and productivity levels will go higher, how does that change the structural wage bill?
I think the wage, like I said, I expect it to continue the way we have been doing it in the past. I don't expect any significant changes from that.
Even at such a high attrition level, you are at a different wage rate.
Yeah, but no, we have been able to again manage that also very, very well by combining a good mix of people coming in from the campus versus people from the market. That mix, managing that mix, continuously training people, continuously cross-skilling and upskilling people on these fronts is what keeps our cost at a level where we want to be at, and thereby basically one can do the wage hikes the way we have been doing it in the past. I don't see that changing significantly, but we'll play it by the year and see how the next 3 months go.
NGS, as we look at 2023, while the management of TCS has said that North America, no problem whatsoever, Europe is where the problem is. We spoke about it also last time. You said, look, some manufacturing companies and some European companies may slow down, which they've slowed down. What are the chances that the slowdown could be a prolonged one? And as we move into 2023, you may be forced to call out that the trend is much slower than what you anticipated.
As you rightly said, last quarter itself we talked about Europe. I think Europe is the most affected by the energy crisis as well as the war, both the counts. On that basis, that that uncertainty continues, and people want to be a little cautious to make sure that they tide over the winter, which essentially means January, February, and is 2 important months that they should tide over. In that context, they are conserving cash, number one. So in that sense that the discretionary spend on large deals, etc., they don't want to drop it, but they want to slow it down a bit. But at the same time, there is vendor consolidation, cost and optimization type of opportunities is something that they want to really see how they can accelerate it, right? So it's a mixture of on the decision side, large discretionary spend, they want to delay it a bit. On the cost and optimization front, how do I, is there an opportunity to optimize? Is there an opportunity to do things better? And especially because in the digital world, newer technologies, newer automation opportunities are emerging every week or every month, right? So they want to see that, look, okay, this is what you're doing, but this is a new technology that has come in. Can you employ this and disrupt our operations a bit higher so that, we are able to be more automation, more efficiency that comes in. So in that context, I think Europe is a bit cautious at this point in time, but I don't see fundamentally anything wrong, right, in either of these industries. Manufacturing, they want to just make sure, slow it down, conserve it, and make sure that they don't stop the factories, right? How can they, especially process industries and all, if they stop it, then it becomes 6 months, it's gone, right? So they just want to make sure that they keep it running for a longer period of time with the lower throughput, lower efficiency, so that they don't have to stop the factories, right? Financial services, things like mortgages, property, casualty insurance, some of those things are all, taking a slower growth on that front. But otherwise, if you take banking, capital markets, insurance, capital markets is doing well, commodity side are doing well, supply chains solutions have been come out, a lot of localization is taking place. So there is enough opportunities to look at.
There are no deal cancellation whatsoever in any of the geographies.
We have not observed in our client base, we have not seen any deal cancellations per se. On the other hand, there have been vendor consolidation, cost optimization opportunities on the rise. Growth and transformations in UK, for example, amidst all the macro uncertainties that you see, is one of the finest market for us, grew by 15.4% this quarter, year on year. And at the same time, decision making has been faster because industry and the government wants to make a quick difference and see that, look, their agenda for the next 18-24 months from a growth and efficiency perspective is achieved very quickly. I think Europe will follow suit.
Last time when we spoke, and I'm going to quote you here, you said you see a strong possibility of a double-digit growth. Is there still a possibility of double-digit growth, or possibility has become a probability?
As a management team, we are always focused on that. I think that has been the statement that I've always maintained, and there is no point in saying that we don't want to focus on double-digit growth. It's not going to. It's like shooting on my own feet, right? So as a management team, we are focused on getting to that double-digit growth all the time. Barring certain really uncertainties that play it, I think we should be able to achieve that.
It's also that time of the year where we are forced to understand the IT spends, IT budget, client indications, and what they indicate perhaps in Jan and Feb perhaps holds true for rest of the year if macros are decent. What is the sense there?
We have connected with all our customers. We have put feet on the ground, and we are working very closely with our customers. A good number of contacts have been made with the customers. I think that technology spend is largely secular, and that is expected to stay put. We have not received any adverse comments per se. But having said that, many of them have not finalized the budgets. The budgets, the clarity on budgets, where they want to spend, that will become clear, in the next couple of months, right?
Is it different from last time, or last time?
It's always the case. Always the case that while calendar year end, they will firm up the budgets. Typically, the visibility on where they want to spend, how they want to readjust it, that will become clearer to us in the month of January, right, or early February. Given that most markets have an extended furlough into January, and then the real work starts from 10th of January, right? So we'll have to wait for the next 6 weeks to get some clarity, and then. But I expect this to be largely intact.
There are a lot of structural changes which have happened in last 18 months. One of them is travel, on-site, subcontracting. So I'll start with the latter part first. Because of the business rush or sugar rush, TCS and other IT companies adopted a model of subcontracting. Do you see that changing? Do you see that coming back?
So you saw that the subcontracting cost has gone down in this quarter, and we subcontracting is a model which is core part of our business, and we do that based on the need, specific short-term need, and do that. But in general, the number was much higher because of all the other issues we had in the past years, including pandemic and travel restrictions. Because of that, I expect that the subcontracting cost to come down. But some of these things are also very decision driven based on that time of the need of what we need, that particular resource. So I think expect it to come down, but in general that's part of our model. So I not too much worried about the fact that it is if it comes down at a gradual level, it's good enough for us.
Are we looking at a new world? Because there was time when we would excessively discuss on visa, availability of H1 visa. We've not heard IT companies really talk about it and really mention it again and again. Is this a new world where all those old visa concerns are behind us?
So I think if you look at it, our model has been global for many years. We have actually been hiring globally, not just the people from the market, but also basically from the campus, across all locations, across all geographies. So our model is truly global for many years. Just the H1 situation has been not so good for the last couple of years, but we managed it in spite of that because of the fact that we had a global model, and that will continue. And we manage our costs also that way by basically having the right mix in that location as well. So that is working for us.
And just allow me to take a leap from your answer, and since you mentioned that deals which you are getting now are essentially centered around cost optimization, vendor consolidation, What does that mean? Because the earlier deals which you've announced, let's say in 2021 and 2022, they were centered around transformation and cloud implementation. That's a different technology. If you are executing a different technology, obviously there is going to be more butter in the bread, so to speak. Is this good business, but a low margin and a tough business to execute?
It's a mix actually. What I mentioned was in Europe, the cost and optimization deals and vendor consolidations is one thing that's happening. In addition to the growth and transformation, where the decision making has slowed down. But in terms of other markets, for example, UK and US, we don't see that happening because there are vendor consolidation and cost optimization opportunities, and there are growth and transformation opportunities. As we see it, the overall deal pipeline and what the order book that we have, there is a very good, healthy mix of new technology work as well as some of the older technology work. In either of these cases, there is enough digital work that comes into play. So the overall business mix, the resource mix, and the project mix is what we need to get it right. And I think the pipeline we have and the execution model that we have ensures that we put the right mix, right location mix, right talent mix to achieve the desired revenue growth as well as the margins.
How do you see the competitive landscape changing for IT outsourcing stroke IT spending for this year? Because ultimately the benchmark for TCS is market share gain and also what we are hearing from other vendors.
No, I think we have the traditional set of competition that is always at play for either of these opportunities, whether it is growth and transformation or cost and optimization. But I think what we differentiate ourselves is superior execution and the way in which we have been able to bring together the collective TCS expertise, right? The full services of TCS, right? Because in these times, customers tended to prefer someone like TCS, which has got everything to offer, whether it is TCS Interactive on the giving the experience, the cyber security, the core cloud skills, as well as the overall execution rigor and execution methodologies to deliver it within budget and on time. And that's something that delivers the best customer satisfaction as well as the good revenue and margin results for us.
Milind, I'll wrap it up with one final question. Now, TCS is India's largest IT company, so whatever you will call out today becomes the benchmark for the industry and everybody would look up to that commentary. We've had an extraordinary demand rush and an extraordinary level of attrition. While you've called out at a TCS level that where attrition is headed, but for the industry per se, what trend do you see in terms of attrition and wage?
No, things are definitely normalizing. Things are definitely normalizing. Like I said,
let's keep TCS aside. I want the industry view.
Industry-wise, I believe things will normalize. Things are normalizing because of we are already seeing it. I'm seeing it now. I'm seeing it. What's happening in the next quarter. All of that, makes me believe very firmly that it's not just TCS. Across the industry, things are normalizing.
What is your definition of normal for the industry?
It will come back to pre-pandemic levels in the next few quarters.
For industry, both in terms of attrition and where you see the year-on-year wage hike moving.
I'm talking about attrition right now.
Okay.
So attrition, I will talk about it for the industry. The industry,
Okay.
I'm seeing it. Okay. Wage hikes is obviously depends on every company how they want to do it. I'm saying it. We don't expect it to change, but we'll obviously play it by the year and decide in the next 3 months.
And just last question from you, really an industry-wide question. Whatever you'll say, like I told Milind, becomes the benchmark now. You've given us hints on TCS. I want to be slightly more industry specific. Do you expect this year to be a challenging and a tough year for industry? Well, TCS has got levers why they will grow. We know the pillars on which this great company has been built. But for the IT industry per se, could it be a tough and a rough year?
I think I won't call it tough and rough, but I will say that it will be tough and smooth, right? The sense that, look, things that need to be kept going, people will keep going, and there will be further optimization. People will really advance their cloud agenda into what we call as Cloud 2.0 and Horizon 2 and Horizon 3 type of initiatives. The machine learning will define the future business models. People are really looking at machine learning. What does it mean to our business, right? And how I can really leverage the digital technologies and the advancements that we have made in cloud into redefining their own business models and ecosystems.
I'm tempted to ask one more question again, and let's clear the air. I don't want to, mix words here. TCS management has aspirations that they want to grow at double digit. But does NGS see a possibility or a probability of a double digit growth? You're going to choose the word. Aspiration is your word, probability and possibility are my words. Choose between probability and possibility.
You have put a challenge at me, and I'd say I'm ready for that challenge.
But the word, sir, I'm looking for that word, probability or possibility?
Possibility.
Possibility. Really appreciate your time. Yeah. Have a wonderful 2023 ahead, and fantastic to have you on ET now.
Thank you, Nikunj.
Thank you very much.